Hey, my name is Marty Shedd. I'm an insurance broker here in California and most of the western states, and I'm kind of here to give you the talk about the challenging market that we happen to be in. When many people think about insurance in California, especially our local area, and I've heard this multiple times in the last 6 months, and I even heard it again earlier this week. I live near I live near Oak Ridge High School. I'm not in a fire zone. It's no problem, there's no trees around me. But I don't know where people get that information from. The entire county is what most carriers consider a brush fire area. I have clients that live in Serrano, brand new build on, what's the?
Bass Lake Road?
No. What's the main road around the golf course?
Yellow Pack.
Grisham?
Gresham and Fairview, is it? Something, whatever, doesn't matter. No trees on there. A fire burns in our county, the fire's gonna be out 15 minutes before it even starts. There'll be a fire station there, there's hydrants all over the place. Could not get this guy insurance. Only thing he could get was a California Fair Plan. And it was about $8,000 a year. And I'm like, really? If any house in this entire county burns, it's not gonna be that one. So 2023 started with a ton of rain in our region, and fire season right now has been extremely low. So why are my rates going up? Lots of people ask that. Insurance is not based on one season. Insurance is based on like 5 years of fires in California. We've had losses for the last 5 years. You've seen the news. If you haven't, you should check out the news about insurance. There's a lot of carriers that are leaving the state because they don't want to insure here anymore. Even with auto, I have a carrier that will take 20 business days to review your application. That is 6 weeks. And if you are out of insurance because you forgot to pay your bill, you are waiting 6 weeks before you can even get insurance. Some are down to a 10-day wait period, but still, that's 10 days of not having insurance. It's ridiculous.
Can I ask a question then?
Sure.
What happens if you're buying a brand new car?
Um,
Your current policy then would just pick it up? Or,
Yeah, it
do you know what I
does.
mean?
Yeah, you have
Versus-
10 days.
So, well, it's somewhere between,
Okay.
it's somewhere between 7 and 21 days, depending on the carrier. You get the same coverage as your least insured car. So most people, all their cars are insured the same.
Okay.
Some people, they only have, liability coverage on their cars.
I was just curious, like what happens.
So, yeah,
You're driving it off the lot, you want
Yeah,
insurance.
well, it depends. It really depends on where you buy that.
Okay.
I have a client who was trying to purchase a car from Carvana, and they wanted insurance on that vehicle before they would release the vehicle. So he's like, "It's a Saturday, and my place is not open. I can't do that." So typically, it covers whatever vehicle you purchase. Another thing that is a big, huge factor is, you might remember we had fires in Napa and Sonoma here a couple of years ago, right about that same time as the entire town and county was burning. There happened to be a flood that was going on in Houston, and those are some, two different states. How would a flood in Houston affect me? There are no contractors here to rebuild the houses in Napa and Sonoma. They're all in Houston because that's where the work is, and they're not dealing with, the same type of claims as are what are happening for fire, because that's a lot of litigation and stuff that takes time to get going through, and what exactly caused this, et cetera, et cetera. We're in Houston, floods in, floods out, floods gone. Let's start rebuilding. Let's knock this down, start rebuilding. Contractors are there. There are no contractors here. Price to rebuild your home goes up. People don't realize that the things that happen around the world, it's called co-insurance. Things that happen around the world happen in other countries. those all affect the price of your premium. So in California, we're currently facing what's known as a hard market, which is a culmination of stricter coverage terms, increased premiums, and challenges even in obtaining insurance. Several contributing factors help make up this composition. Significant payouts for catastrophic events like wildfires, floods, mudslides, earthquakes, all make up the reasons that increases that we're seeing. Secondly, the premiums collected are typically invested to generate further income. Market volatility and low interest rates have prevented insurance carriers from achieving their predicted return on investment. So, and I'm sure Lee could probably talk to that for forever. Additional contributions are changes in legal and regulatory landscapes, items such as shifts in potential liability due to rising premiums and coverages being tightened to manage the current risks and those yet to materialize. Liability laws, increased cost of litigation are all passed along as additional premiums to clients. They're not, insurance companies are getting dinged with higher rates. They're not going to just not pass that along to you. And it's every carrier. It's not just, so as a broker, I broker on the personal line side, which would be your home and auto and umbrella and those kind of things. I broker between 8 and 12 different carriers depending upon who happens to be writing at this time. Commercial side, there's about 100 different carriers I use depending upon what your business is. But it's not limited to just the carriers that I have. You know, State Farm, Farmers, AAA, everybody buys into that and has the same kind of the same kind of costs that are associated with doing business. Insurance carriers are placed in challenging positions when clients resist rate increases. The carrier's financial stability is threatened when they're not able to generate sufficient income through premiums. And as a response to this, many carriers have chosen to reduce their presence in California or just withdraw altogether, making it very difficult for agents to sell and clients to buy. With the withdrawal of carriers, it makes it more difficult for businesses to obtain, or clients to obtain home, auto, commercial insurance throughout the state. With fewer carriers in the market, obviously there's reduced competition, leading to limited coverage and options, higher premium increases. For some, it makes it very difficult to even get insurance. And I'm sure that you have many clients who are, typically when you move, you can carry your insurance to your new home. That hasn't been the case probably in 10 years. It's not a guaranteed thing.
The first conversation, depending on where they're looking, like I had some clients that live in Serrano right now, and in, one of the regular subdivisions, community streets up there, right. So I don't think their insurance is too high. They were looking out in Auburn, and the first thing I said to them, do you realize what the insurance in the fire insurance is going to be in Auburn? And let's look at that before you even consider Auburn as an option, so you understand. So the conversation with insurance happens immediately with the buyers.
Now,
Yeah, because it is such a cost. The cost has gone up so dramatically.
Yep, and I get lots of calls, not just from you, saying, "Hey, can you insure this place? I just need a ballpark quote." Like, sure, I can take a look at that. This is something that you need to present to your client, because if they're used to paying $1,800, $2,400, $3,600 and it jumps up to $8,600, they probably still qualify for that house, but that's something they have to factor into their monthly payments if they're going to be using those.
So very good for an agent to do that, because my friend, when she first moved to Placerville, she thought she moved from the city of Citrus Heights to Placerville. And come to find when she got there, her insurance lapsed. Well, didn't lapse. They came out because she was so far away from the fire hydrant.
Yep.
And nobody would insure, so she had the insurance that somebody gets that nobody insures them.
State funds.
California Fair Plan.
Thank you.
Yeah.
And it like,
Yeah.
so they had a tough time.
Yes.
Because that just made their house payment, that just made their income go way up.
Absolutely.
And I will tell
Not
you,
income.
there's not a lot of inventory in general all over, except Pollock Pines. We've seen a lot of, between the snow that happened this winter and the price of their homeowner's insurance, people are leaving. The other place is South Lake Tahoe. during COVID, South Lake Tahoe, you couldn't even get a house. The prices were coming up, you couldn't get a house, it was extremely competitive. There are a lot more houses on the market in those areas because there's people now trying to get out of there due to the last snow that we had the last winter and the combination of the fire insurance. That's what we keep on hearing.
Yep.
Sorry for interrupting you.
Yeah,
That's
me
okay.
too.
Well, Tahoe is a very interesting area. The Tahoe Basin has probably one of the best response times. North Tahoe, South Lake Tahoe, one of the best response times for their fire departments.
Nice.
However, insurance carriers don't, every region has their own fire agency, if you will. Some are cities, some are counties, some are regional, some are like CAL FIRE, they're a totally different thing. And they don't all communicate the same way to insurance carriers. There's no blanket for them, if you will, of how they communicate that information back and forth. Insurance carriers kind of blanket an area. They'll blanket maybe a county, maybe typically it's by zip code. Like the example I gave earlier, the house in the middle of Serrano, it's the same zip code as a house out in Ryan Ranch or Cawthorn Ranch. It's El Dorado Hills. And that is a little further out there. There's canyons out there. Serrano's flat. There's green grass all over the place, no trees. I live up off of Salmon Falls, and there's trees out there, and it's, people in my neighborhood are like, hey, why is my insurance so expensive? Exactly the reasons that I'm pointing out here.
I do have a question for you though. In
Sure.
general, what is the Commissioner of Insurance for the state of California doing? I mean, they have to be working overtime on this because it's a major issue for Californians.
It is. I'll touch on that here shortly.
Okay.
So, Department of Insurance plays a key role in regulating insurance rates. California is called an approval state. Carriers are required to seek approval from state regulators before implementing any changes in rate. If clients resist the rates strongly enough, the DOI, Department of Insurance, can face pressure to deny or limit the increases even if the carriers insist that they are necessary for financial stability. So the DOI will say, nope, we're not going to do an increase on there. The insurance carriers come back and they're like, well, we can't afford to do business in California. That's not the reason that they can use, but they can use other reasons to kind of pull out. So as you're seeing carrier, like big carriers like State Farm, Farmers, those guys, Allstate, that's why they're pulling out of California. They'll probably be back. I mean, this happens about every 15, 20 years or so.
Is Farmers pulling out too?
I've seen some of them pull out, yeah.
Okay.
Farmers insurance?
So,
Me too, that's why I want to know.
I just got a letter yesterday, Kemper's pulling out of the state of California. They were kind of a big one. The long-term viability of the insurance markets also are a factor the DOI must face. Allowing to carriers to raise rates, reasonable limits, maintaining a healthy insurance industry throughout the state. Carriers need to manage risks, cover the cost of doing business, and those are things that, like I said earlier, they will pass those along to everybody through premium. An approval state means that the regulators have the authority to revise and approve or disapprove rate changes as proposed by the carriers. Evaluations of proposed rates determine justification based on factors such as operating costs, profitability, claims experiences. Approval states seek to balance client needs with those of the insurance marketplace to ensure a sustainable reliance on what's going to happen. The insurance commissioner has probably one of the more difficult jobs in the state. The more that they resist a change in premium, the worse it's really going to be for the end user. As insurance is not like, or insurance is just like any other thing in the state. I mean, a gallon of milk costs more than it did a year ago, costs more than it did 5 years ago, costs more in Hawaii. gasoline, anything that you purchased is more expensive this year. And when people are like, I haven't had a claim, why is my insurance going? I'm like, are you serious? I'm like, think about it. I'm like, they're not giving, insurance is not free. Everybody, I think one of the two, you said it earlier, it's something that you need to have, and it's probably one of the most expensive things you'll purchase until you need it. And then when you need it, it's the least expensive thing you've probably ever purchased in your life. You're paying out, I don't know, in your case, $3,000 a year for insurance, and
And it went up, you know,
Right.
when I got that $3,000 bill, my husband's like, what the heck is going on
Yeah.
here?
and I was pretty quick to respond, like, hey,
Yeah. Marty's like, that sounds good to me. And he's not the carrier. He's like, yeah, just pay it. Don't let that one lapse.
As it happens, shoot, I forgot what I was saying.
Insurance is the most important thing when you need it.
Yes. So yes, sorry. Thank you. You're paying $3,000 a year. They're insuring your house for $1.5 million. Something happens to your house, they're forking out $1.5 million. It cost you, I don't know, over the 30 years.
Pennies.
Yeah, pennies. And I'm like, but people don't think like. Many clients don't think like that, and they should.
Can I tell you just a quick story? About 23 years ago, my father, who was living in his house with his girlfriend at the time, at 3 o'clock in the morning, the garage next door blew up. Just blew up. There was some chemicals in the garage.
Yeah, there were.
Fireball enveloped my father's house. He and she both got out of the house. They got their cars out of the garage, and the house essentially had smoke damage. Everything was gone. Now the insurance company said, smoke damage, we just can't do anything. They gave him a brand new house. So he had a really great policy, and they rebuilt it from the ground up. So essentially, even though the house, we've been in that house for 50 years, the house itself, if it had to be resold, it's only about 20 years old.
Yeah.
Because everything, the refrigerator, everything, the countertops, everything is 20 years old, because the insurance company, why? Because he had a good policy. That's really what I wanted.
Yep. There's when people ask me, is there anything I can do to trim this off here and trim this here? Yes, there are things that you can. However, don't try to figure that out on your own, because if you're trying to figure that out on your own, you're not a professional. It's not something you study every single day. You might be making a cut here when you should have made a cut here, and this one's really going to bite you and cost you a lot in the future, where this one cost you $10. You might save $100 here, but is that really a savings when it comes to covering it?
Yeah, the rebuilding costs is
Yeah.
what, if the house goes down.
Yep.
To rebuild it now is much more expensive than it was 3 years ago.
Absolutely. COVID certainly didn't help with that, that's for sure. So, any other questions?
That must be why too, because I've had farmer's insurance for 25 years. So this is the first, I got a notice saying that when your policy renews now, they're wanting 2 months up front. My bill goes to 2 months.
Yeah.
So I go, oh, that's right, they told me that, I love her.
Yeah.
It's never happened, so I don't know if that's why it's happening.
A lot of carriers have done that. It's to, you probably don't budget week to week for your home mortgage.
I budget everything.
Some people, that's a big deal for them. A lot of my carriers that I write with, they went from maybe a 6-month auto policy where you paid it in 1/6 increments, and you paid, 16.7% down, jumped to 25%, and they're like, oh gosh, that's a lot of money. I'm like, well, you know your insurance, you know how much your insurance is every month. You should budget for that.
Yeah.
Why don't you pay it all at the same time at the beginning of the year? You're not going to miss out on $3 of interest rate that you may get or whatever. It's not just farmers. Every carrier is doing something like that. So, any other questions?
Well, thank you, Marty, that was nice.